Okay, welcome to this week's market report, where we're going to dive into the month of May to see what happened in the month of May between May of 2023 versus May of 2022 and how the year's progressing. Does it mean prices are going to drop? Is the looming recession going to affect our housing prices? And if so, in which way? We're going to go over all that. So let's dive straight into it. So here we go. Number of new listings for May of 2023 was down. You'll see May of 2022, it was almost 50% down. Okay, so that is the inventory basically crisis that we're dealing with. That is what's driving the strength of the seller's market right now. So why is inventory so far down? Well, there's a couple of reasons. Number one, a lot of the sellers right now, they have interest rates that are lower than the current interest rates in the market. So there's a lot of pent up buyer demand in the sellers, in that sellers are wanting to move up or they're wanting to move down. So the people that are selling their houses right now are selling them because the decisions they made in the past and they had to follow through with them, like a new build or something, or they're selling because they have to move for a job. But it's hard for a seller to go from a 3 or 4% interest rate or a 2.5% interest rate up to a 6.5, 7% interest rate, especially if they're trying to move up. So a lot of sellers right now are waiting for the market, the interest rates, because everybody understands and believes that the interest rates will calm down and they will start to come down. Once those interest rates start to come down, then we will start seeing an increase of inventory in the market. But that doesn't mean that that's going to be a challenge, because you can see, or that's going to cause the market to crash, because once this inventory hits the market, those sellers are going to become buyers somewhere else. So it's also a built up buyer demand there. Now, along with that, we have the built up buyer demand for all the buyers that are sitting back and waiting for interest rates to come back down. So with these two factors in mind, what's going to happen when interest rates do finally come back down? And they finally get into the fives, the mid fives, maybe even the upper fives. Well, what's going to happen is we're going to have an influx of buyers. All this pent up buyer demand is going to flood the market. So inventory is going to have to increase like double to triple what it is right now in order to overcome the buyer demand that's going to be coming in. So there's no evidence that looks like there's going to be a price drop anytime in the near future in this market specifically, but even nationwide, we're seeing that while volume is dropping, volume is 30%, 40% in some areas. While volume is dropping, we're seeing that the prices are not, because the buyer demand is still higher than the inventory. So the number of new listings that we have here, so the number of listings are just not there. So the inventory is not there, and demand is much higher than supply right now. Number of sales for May of 2023 was less than the number of sales for May of 2022. So a lot of the articles that you're reading where people are talking about the market is slowing down, the market is the real estate market is down 30%, 40%. This is what they're talking about. They're talking about the total volume of transactions. And this is true. I heard a statistic the other day that our projected volume of transactions for this year is 4.2 million nationwide. In 2008, in the heart of the Great Recession, the volume was 4.1 million. So as far as volume is concerned, we're close to that number when the real estate market totally crashed. And that's what the media is putting out there, because fear sells. So yes, our real estate market is down dramatically, but it's only down in volume. It's not down in prices or demand. And that volume is because nobody's selling, and really the buyers are not buying. Now, the only thing that would cause us to go into a market crash right now is if all of a sudden inventory started climbing and climbed almost to like at least double what it is now. Then we might have more supply than demand. But right now we just don't have that issue. So that's why prices aren't coming down. So you can see that on our next statistic. You can see days on the market. So days on the market is at 22. May of 2022, it was at 19. So it's a little bit longer, but that's really not a significant amount. You can see that we're staying just in a really low days on the market, which means properties are coming on the market and they're selling, and they're selling very quickly. Months of inventory. So this is what we call the absorption rate. And this is a very important number, because this is what tells us, are we in a buyer's market? Are we in a seller's market? What kind of market are we in? And that absorption rate is basically, you take all of the current inventory and you take all of the sales and over the period of 30 days. And based on those numbers, if no new houses came on the market and if these numbers stayed the same, how long would it take for us to get to zero? That's how many months of inventory we have. So a good neutral market is somewhere between 5 and 6 months, depending on who you talk to. That's a neutral normal market. Anything above a 6 months on inventory period is a buyer's market. That means that there's more inventory than there is demand. So that's a buyer's market. That's where prices come down. That's where buyers have the leverage. Anything 5 months or under is a seller's market. That's where the sellers have the leverage because there's more demand than there is supply. So as you can see, we're still in 3 months. The only time we've gone above that 5-month mark was in October, which is in the fall, which is not unheard of, and in January, which again is not unheard of, and it was a glitch. Everything else, we've stayed consistently in a seller's market. Median sales prices. So we're going to talk a little bit about median sales prices. And if you watch this monthly report each and every month, what I'm going to say is going to be redundant, but it is very important for the new listeners and the new watchers that are coming in, viewers that are coming in to understand what median sales price means, okay? So the median sales price for May of 2023 was 1.15 million. May of 2022, it was 1.2 million, okay? So it's down $50,000, the median sales price. It's down a little bit from April even. It's down, what, $20,000 from April. So does that mean that prices are starting to fall? Not necessarily. So what the median sales price is, it does not indicate the value of a specific property. What it indicates is you take a group, a study, a group of transactions, and you organize them, and the median sales price is the number that falls right in the middle of that group of transactions. So what does that mean? I'm going to show you what that means. And again, this does not have anything to do with home value. It has to do with what the price is sold at. So if you look at this example here, month one, we have, was this 1, 2, 3, 4, 5, 6, 7, 8. We have 9 transactions. That means that transaction number 5 is going to be the transaction that falls right in the middle. Okay, so in this example, we have 220,000, 225, 275, 350. Transaction number 5 is 500,000, and we have 1.5, 1.65, 2.75, and 3 million. Okay, so in this example, the median sales price is 500,000. That's different than the average sales price, and that does not give us any indication of the value of any of these individual homes. Okay, month 2, we have the same thing. We have 9 transactions, and you can see we have 315, 350, 385, 395, and the median sales price is 400 because that's the 5th transaction. And then you have these. Now, all of these numbers in this list, every single one of these numbers is higher in this list. But because the median sales price was 400,000, that number right there, then technically if you come over here, month 1, the median house price was 500,000. Month 2, the median house price is 400,000. That means the market was down 20%. So if you look at the media is going to say, hey, the market is down 20%, which makes you think if I go look at a $500,000 house, I'm going to get that house for $400,000. It's not at all what the median sales price means. It just means that people were buying, and that was the number that fell in between. Now, if you take that and you take a large sampling, the reason they use median sales price is because it does give an accurate number of what people are buying. But when interest rates go up, people are going to buy less expensive properties. So they may be buying, the people that were looking at a $500,000 property, for example, now have to look at $400,000 properties. In our market, for example, here in Northern Virginia, let's say that I'm a $500,000 buyer, and I am that median number, just as an example. And I was looking at $500,000 properties. Well, now because of the interest rates, I have to buy a $400,000 property. Well, I'm still buying a $400,000 property that's worth probably $375 to $400. I'm not buying for that $400,000. I'm not buying a $500,000 property for $400,000. So my median sales price came down 20%, but the property value itself probably came up a little bit on that transaction. So that's why median sales price can be a little bit misleading. So when you're listening to that, if you find an area where sales prices came down, so for example here, median sales price is down year over year from May of 2022 to here, it was down $50,000. Doesn't mean that prices are dropping, it just means that's what was purchased and that's what fell into that position. Okay, I hope that makes sense. Now, the next number to look at is the list to sales price ratio. You can see that 100%, this is what the property went on the market for, and then what it sold for. Okay, so you can see here in August, September, October, November, December, January, we had a period where sellers weren't catching up to the fact that buyers, that they couldn't overprice a property and still have it sell. Because there was a period where you could overprice a property and it would still sell at or above asking price. So there was an adaptation period here. February they started to kick on, and then March we hit the spring market. So whether sellers caught on or not, for the most part, most properties are selling, and they're selling above asking price. This is the asking price, and they're selling above. Now it wavers, 101%, 102%, but even at the lowest, even in January, it was 98% of the sales price. And all that means, again, it has nothing to do with value. That just means that it could have very easily been that a seller overpriced property by 2% and had to reduce it down to market value before it sold. Okay, so in other words, prices are not coming down currently. So if you're sitting on the sideline and you're waiting for prices to come down, especially if you're thinking the looming recession is going to bring prices down, let's talk about that then. This may not be the soundest strategy, because what's happening is over time, these prices are going to continue to go up. So if you're renting right now, think about it. Every 6 months, let's say you have a $2,000 a month rent. Every 6 months that you are renting versus buying, you're spending an additional $12,000 on the next house that you buy on top, because you've just spent 6 months of rent, you've thrown it down the trash or down the drain. On top of that, the property's probably appreciated 2 to 3 to 4%. So if you're in a $500,000 price range, your property just appreciated probably $15,000, and you just threw away $12,000 in rent. You just paid an extra $25,000 for a property because you're waiting for interest rates to come down to save you a couple $100 a month, or you're waiting for whatever it is you're waiting for. You're waiting, and you're getting yourself in a situation where prices are getting more and more expensive. So you're thinking, well, when the market crashes, I'll make up for it. That's what a lot of people are thinking right now. So let's look at historically. Now, I'm not pretending to say that I know what's going to happen with property values. Anybody who tells you that they know what's going to happen, they do not know. They are just predicting. So for me, in my opinion, the best predictor of what's going to happen is by looking at history. So let's look at history. First of all, this line here is the interest rates, and this line here is median sales price. So interest rates, and again, median sales price, you now understand what that means, but we're going to use that in the example here so you can see what's going on. So fixed rate mortgages, you can see even when interest rates were extremely high back in the 80s, prices still continued to appreciate, or maybe flattened out a little bit at the highest, but in general, they appreciated. They did not drop. So interest rates don't cause prices to drop. They just cause the market to slow down, but they don't cause prices to drop. Everything continued up. Interest rates came down, market continued up, 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 up. These purple lines, these are years of a recession. I went through and I looked at what were the years of recession. So I highlighted it. 1980s, there was a recession correlated with the interest rates, and property values went up. 1990, there was a recession. Property values kind of flattened a little bit, but they did not drop, which is what everybody's waiting for right now. The year 2000, property values went up during the recession. The year 2008, 9, 10, property values did come down here. They came down dramatically, but the housing market was the cause of that Great Recession. It was the housing bubble. It was when they had all this subprime lending, and they packaged it and they sold it off to investors, and everybody defaulted, foreclosures skyrocketed, and we had a huge crash. This is the only time that prices came down due to a recession. Historically, recessions do not bring prices down. We had a recession in 2020, prices went up. Theoretically, we're really in a recession now. We have been off and on for the last 6 months, and prices have continued to go up. So if you think a looming recession is going to cause prices to crash, it's not historically proven to be true, okay? So that's where we are. The market is continuing to be strong. It is slower in volume, but the prices are continuing to slowly appreciate. Oh, I forgot about my new graph here. So let's go through this and let's think about this logically, okay? I have a graphic representation here to make it easy. So May 22 versus May 2023, market activity, number of sales compared to the two, we looked at that and it's down. So it is down compared to that. Months of inventory, supply versus demand, we were at 3 months, so we are under that. So even though market activity is down, supply is still below demand. Demand is still higher. which means that logically we're going to go into increased appreciation. So the projection, at least for the near future, is for prices to continue to steadily increase. All right, if you have any questions about this, please feel free to let us know. Please be sure to like and subscribe so you get all the updates when we send out new market reports, so that you can be totally up to date with what's going on in the market. And be sure to watch our weekly market reports, because that will give you a 7-day window so that you can strategize in the short term and know exactly what's going on and not miss any opportunities that are out there, either on the buy side or the sell side. All right, have any questions, reach out to us, and we'll see you on next month's market report.